All right, everybody. Thank you all for coming out tonight. We're excited to be putting on this event with Wimsett Company as well as Stalkeen and Ogden. Don't forget to put your business cards actually in the bucket on the registration table. We are giving away 10 $25 Visa gift cards tonight after the presentation. I want to introduce Tom Wimsett of Wimsett Company. Tom started Wimsett Company in 2012 after 30 years of working in the payments industry. He decided it was time to revolutionize the payment processing industry with a new and unique business model, one that puts payment industry experts on the merchant side to negotiate better pricing and terms, audit bill payments from companies, and effectively manage the payment company relationship for small business owners. Tom?
Thanks a lot, Jonathan. As Jonathan said, I've been in the industry for over 30 years. Some of you may be familiar with National Processing Company. It was a large payment processing company based just southeast of Water Center Expressway and 65 intersection there. And spent 19 years there, was the CEO of that business, and then started Iron Triangle Payment Systems in 2003, and we grew that business to just under $300 million in revenues and sold it to Vantiv Payment Processing back in 2010. Which some of you may be familiar, Vantiv was the spin out from Fifth Third. So anyway, that's my background in payments. Happy to be here tonight. I want to welcome all of you here. We're pleased that you came out to hear about what's happening in the payments world. We've got a distinguished panel here to join us this evening, and I'm going to let each of them introduce themselves. So without any further ado, I'd like to go through the panelists here and ask each of them to introduce themselves. Bruce, Gadansky, would you go first?
I'd be happy to. Thank you. I'm Bruce Gadansky. I'm Vice President for Operations at the Better Business Bureau. I'm particularly interested in this subject in that I deal with a lot of businesses who have a lot of questions and also the consumer side of the shop. So I'm really looking forward to this interchange.
Thanks, Bruce. Doug?
Hi, Doug Brent. I'm an attorney at Stalkeen and Ogden here in the Louisville office. Work in the telecommunications business and also information privacy and cybersecurity. I dropped off an article on the EMV standard on cards that was in Insider Louisville recently. There's some copies back there if anybody wants one.
Thanks, Doug. And last but not least, Jason Weiniger.
Hi, I'm Jason Weiniger, and I'm with TSYS Merchant Solutions. We're also a payments processing company. And I've been in the industry now for the past 18 years and worked with merchants of all sizes and all industries, as well as financial institutions. Pleasure to be here.
Thank you all. Before we kind of start with some preset questions, and we'll also open it up for audience participation, any questions that you all have here, I wanted to provide just a little bit of background information about electronic payments and the topics that we're here to talk about, specifically EMV and the move to mobile payments. But most of us have heard, I think, through various news reports over the years that 2/3 of GDP, of gross domestic product, is what's called personal consumption expenditures, right? It's what consumers buy on a daily basis. So personal consumption expenditures drives about 2/3 of GDP. And if you look at the share of wallet in terms of how those personal expenditures are being made, and that's one of the ways we look at this in the payment space, back just in 2009, roughly 60% of all personal consumption expenditures were being made with a card or electronic-based form of payment. Fast forward to 2014, and that number is now, or was 82% in 14. Again, I've been in this industry for 30 years. When I started working in this industry back in 1983, the penetration of electronic payments and card-based payments was roughly about 15%. And now it's grown over these 30 years to be 82%. So it's an important element in terms of how consumers are wanting to pay for goods and services, and of course business owners need to be ready to accept those payments. As we continue moving toward this cashless society, it obviously brings a lot of increased concerns around risk, around the risk of card fraud, the risk of identity theft, the risk of a data breach, particularly if you're a business owner. And so, in fact, if you look at card fraud statistics in the United States, again in 2014, there was about $7 billion worth of fraud on credit cards in the United States. And about 37% of that, or 2.5 billion, deals specifically with counterfeit fraud. That's when someone has stolen a card number and reproduces a card that can be used with that information. Different than lost and stolen. Okay, if somebody steals your card and uses that, that's just under $1 billion of that 7 billion. Over 3 billion of those fraud losses are due to online sales. Okay, and if you look at a percentage of overall card usage, fraud losses represent about 15 basis points. Okay, so not even a half of 1%. But again, with online transactions, those fraud losses move up to close to 1%. So given some of that background, the card networks were very concerned about card fraud and the rise of card fraud. As more and more people were moving to electronic payments, the cost of fraud in the industry has continued to expand. And so the card networks, with that in mind, and also thinking about providing for infrastructure for mobile payments, in 2011, Visa announced plans to accelerate the migration to contact chip and contactless EMV chip cards in the United States. And as part of that migration plan in 2011, they also announced a shift in liability starting in 2015. I think a lot of you have probably heard about this liability shift that is occurring with these counterfeit and EMV transaction types. And so I wanted to pose a question here to the panel and get us started. And Doug, I'm going to ask you, if you would, to kind of kick this discussion off, and then we'll have the other two gentlemen join in here. But what did the liability shift in October of 2015 really mean to businesses that are accepting card-based payments?
Sure. It really creates an opportunity for businesses, merchants who accept cards, and for banks or anyone who issues a card to make a business decision about risk. And I mention that because when you read articles about the liability shift, when we use the word liability, a lot of people assume, oh, that must be a new law. It's something Congress did. And that's not the case. These are commercial standards in the financial services industry. And I mention that because I think I've talked to people who are under the impression that after October 1st, if a merchant wasn't accepting chip-based cards and requiring their use, that they were violating a law. Or likewise, if your bank had not sent you a card with an embedded chip, which is what you hear even more often. I don't have the right card. That it was somehow a violation. Not the case. So as of the shift deadline, if you are a merchant and you take steps to have a chip reader, a card acceptance slot, and have it activated and you use it, it basically protects you from liability for counterfeit cards. The reason being that EMV is a counterfeit protection measure, and that's a big deal, but that's all it is. It's not the solution to all card fraud. It's the solution to the problem that's endemic, which is counterfeit cards. To your point about shifts in perception, when I was in college and through law school, I worked in a grocery store, and it was long enough ago that when I worked in a store, If a transaction was under $10, most people would pay with cash. And if it was more than 10, they would write a check. No one accepted cards. And when we first started accepting cards, if someone pulled one out, people in line behind them would look at them like, whoa, it must be hard times, you know? No one charges groceries. Our consumer behavior has been completely reshaped. Now we use cards for pretty much everything. You know, a dollar Coke at McDonald's. But the other thing that's changed is when you think about it, back then, card acceptance was an embossed card, a machine to swipe the card, a very face-to-face personal interaction, and that took a while, including the chance to look at the back of the card. Now we've moved to the self-checkout model, and MagStripe. That has created the opportunity for all the fraud, and just my opinion, that's happened over the last few years.
That's great, Bruce. I appreciate those insights. Jason, would you like to comment on this? I know you work with a lot of business owners and also financial institutions with regard to EMV adoption, and maybe you can talk about some of the experiences that you're seeing with your clients.
So absolutely. With financial institutions, obviously there's an immediate need for those financial institutions to begin to issue those cards, because that liability shift is a big dollar amount. We're talking over $3 billion in liability shift annually from financial institutions to merchants, potentially on issuing fees alone. So with that being said, the lesser of the two technologies holds the liability for those types of transactions, if you look at it that way. So if the financial institution is issuing a MagStrip only card and not an EMV card, they have the lesser technology if there's an EMV present in the marketplace. And the opposite is true. If the financial institution has issued an EMV card and the merchant doesn't have the ability to accept it and has lesser MagStrip technology, obviously the liability for that transaction is sitting then with the merchant.
Thank you. And Bruce, again, I know you talk to a lot of consumers and also business owners, and what kind of things are you hearing out there?
What we're hearing, I don't know if you're familiar with the term FUD, F-U-D, which is fear, uncertainty, and doubt. And a lot of it really is just a lack of knowledge, not having the information handy. People call us frequently to just ask. I don't know where to go to get this information. What can you tell me? We're trying to calm things down a bit. You may recall that, you know, when MagStripe came out, it was kind of an upheaval. I still have a card around somewhere without a stripe or a chip on it. It's resting in a drawer. It was some Sears back in the 1960s, and that was kind of revolutionary when it came out. The type of concerns that small businesses have is really that they, in some cases, as Doug so correctly pointed out, they think this is a legal requirement and they'll somehow be penalized. Well, they can still continue to take MagStripe cards. They're going to take calls over the phone where people give them credit card information, cash card information, and they're going to do business that way. But having that reader is going to lower their liability. It's a positive thing to have that. I don't know what the cost of the readers are. I've heard a few $100s has been quoted to me. But I think with understanding, it will begin to mitigate the concerns, and people will get a better understanding. We do send them to certain websites on the internet. If you'd like to know what they are, I can tell you where there's some really good consumer and business information about what it's all about. It kind of explains it in a friendly, sort of term instead of getting into the high technology.
Appreciate that insight, and I'll just kind of add here, just make sure everybody's on the same page. So if you have a business and you've not upgraded, your POS device to be able to accept EMV, so if someone comes in and it's a counterfeit card and it doesn't have an EMV chip on it, it's a MagStripe, and you swipe it through your normal terminal, that liability still goes back to the issuer in those cases. The focus here is if the fraud could have been prevented. If the fraud could have been prevented, the counterfeit fraud could have been prevented, whoever was the weakest link is going to have liability. And so if someone walks in and they've got an EMV chip card and that on that card, but it's a fraudulent counterfeit card and the merchant doesn't have an EMV card and they swipe it in that case, now that merchant is going to have liability because they could have inserted it with the chip and detected that fraudulent counterfeit transaction. So, what we tell our clients is, it is important to ultimately upgrade to the EMV technology. It's important that you move in that direction, but there's a lot of industries like restaurants particularly that have been very slow to adopt. Jason, do you want to talk about some of the challenges that some of your restaurant clients are having and how they're adopting to EMV?
Absolutely. First point that I'd like to make, though, is EMV technology is not new. In the global arena, EMV technology has been adopted by several countries before the U.S., and that's really presented a unique challenge for the U.S. Financial institution and the payments processing industry. And that simply is that we have been a target for the global economy for data breaches and fraud, because it was easier to do card-present counterfeit transactions in the U.S. without EMV adoption. So all of those data breaches that you've heard about in the news, in the press recently, with large retailers, that represents just less than 10% of the data breaches that occur in the marketplace today. Over 90% of the data breaches that occur that affect payment industry information, credit card numbers, and personal information is to small businesses, mom and pop businesses. So that's important to note. So to Tom's question related to restaurants are unique in the way that their service model works and the transaction itself. So in a card-present environment where we have the credit card immediately in between the consumer and the cashier or the merchant, it's very easy to have an EMV transaction, but our service models in restaurants are a little bit different than that. We're accustomed to it a little bit differently than the rest of the global market has adopted. So gratuity really drives that. And when you receive your check at the table and you put your EMV transaction or card in there, it's not going to be as easy for that restaurant to bring a credit card reader to the table or to have you check out as you leave. That really disrupts the service model. So what you're seeing is now, for especially high-end restaurants, there is no immediate plans, probably never going to have a plan to convert over to EMV. And they're willing to stand and wait and really get a sense for what that liability shift will mean to them financially before they make the decision to invest into that type of technology and disrupt their service models.
When I think of fraud risk on counterfeit cards, I think of situations where you can buy goods that you could immediately put on Craigslist or eBay, and you can't do that at Jack Fry's. So is the risk profile different for restaurants as it relates to card fraud?
Chargebacks with restaurants is significantly less than in retail type environments. If you think about it, if you're looking to perpetrate fraud, you're really likely going to be doing what he mentioned, or you're going to be purchasing goods maybe through e-commerce or mail order telephone order. There's more anonymity that way. Or you might test a counterfeit card at a pay at the pump. Because you're never going to see a cashier and you can easily escape, right? So it's hard to think like a criminal, but if you think like a criminal that way, you're going to see that in restaurants, typically the fraud and counterfeit is significantly less than other industries.
We've discovered that if someone does steal a credit card or counterfeits a credit card, generally they've got their shopping list all ready to go. They're going to go down to the big box store and get everybody in the family a 40-inch TV set, new tires, and fill up all the gas tanks they can. And by then, of course, the person has reported the card stolen, hopefully, but it is, on average, what we've discovered, about $3,500. So it's a significant hit. And as was said here, it's in the billions of dollars, and this is really going to stop some portion of it.
Well,
Go ahead.
Bruce, to the example you just gave, which sounded like a stolen card, one area that's controversial is whether when an EMV card is stolen, will there be any reduction in fraud? And I think it's highly debatable because of the fact that we've adopted chip and signature, which is not the global standard. The global standard would be chip and PIN entry.
That's exactly right, and that's really where I was going next, is just to make sure everybody understands the difference between chip and PIN and chip and signature. And the panel's right. And Jason mentioned, most other developed countries have already moved to EMV. We're one of the last to move in that direction. And those other countries have generally implemented chip and PIN. So if you travel to Europe much, you're going to have to enter your PIN number whenever you use, your chip card. Here, the banks chose to go with chip and signature predominantly. And, there's a variety of reasons for that. You guys want to touch on some of the ones that you've heard or you're familiar with in the space? Jason?
So I think the primary reason for that is, again, service model. So for the retail environment, I don't know if anyone went Black Friday shopping this year, but that's about the time that a lot of merchants, especially larger retailers with high-ticket items, were trying to move and migrate to the EMV technology. And it is a slower transaction. It's a slower transaction than simply swiping the card because it's a new process for the consumer. It's a new process now for the merchant as well. So there is going to be a little bit of a time lag. So that was one of the considerations being taken by the issuing banks is let's not disrupt this service model and let's try to stay a status quo as much as possible. In my personal opinion, I don't think that was a good decision. I think if you're going to move and upgrade to the EMV technology, you should go all in and do chip and PIN rather than chip and signature. But that's a bigger decision with the financial institutions and the retailers as well.
Doug, you want to comment on that?
It's probably worth noting, I think it's a minority of institutions have gone with chip and PIN in the U.S. I couldn't quote
some credit unions.
I couldn't quote a statistic on it, but I agree. I agree with you because this creates an opportunity to reduce counterfeit cards, but it doesn't solve a primary problem, which is the ability to abuse that track data on a re-encoded card. I mean, you can re-encode a chip and PIN card and then use it in a place that's not using a chip reader, or places that are currently exempt.
Bruce, do you have any thoughts on the chip and PIN versus chip and signature?
Yes, I do. As a matter of fact, the FBI on October 9th of 2015 came out in full strength saying we need to go chip and PIN. It was October 10th, 2015, they issued a kind of a rewritten statement saying it would probably be a good idea if we did that. Evidently, the financial community was not happy with the FBI for coming out and saying that, but I do agree with the FBI. Chip and PIN, I believe, is the way that we need to go.
And one of the things that I've heard over the years, in terms of Visa and MasterCard, part of the reason that they did not push banks more in that direction is that collectively the banks and the networks felt like that, us as consumers struggle to memorize one set of PIN numbers, for our ATM. If you think about it, you've got 5 or 6 cards, probably in your wallet. Are you going to remember the PIN numbers on all of those cards? Think about the disruption at the point of sale when someone walks up and inserts, dips their card, and then, I can't remember my PIN. Okay, I guess these groceries aren't going home with me today. But, I think that was one of the compelling reasons. I'm just kind of curious. Visa released some statistics. It's almost 2 months old now in terms of the percentage of the U.S. population that they felt like had at least one card that has a chip. And if you all wouldn't mind, I'd just like to see a show of hands of how many people have an EMV card in their wallet. Okay, so yeah, that statistic was 70%. Visa said they thought about a quarter of all of their cards, and they've got over 700 million cards, so 2 for every American, about a quarter of them have been reissued with EMV now. But they believed that at least 70% of Americans had at least one card with a chip on it. One last thing I'd like to talk about here before we move to mobile payments is, one of the common misconceptions is that EMV will protect a business from data breaches. And I guess I'd just like to lob this one over to the panel and ask them to comment on that and some of the misconceptions maybe they've seen around that. And then also, what else, are they aware of that business owners should be doing to protect their clients' confidential data?
EMV is intended to work in tandem with what's called the PCI data security standard. And I should let somebody correct me if I say this wrong, but the fact that you accept an EMV card does not change the possibility that track data might be stored in the clear, let's say on a PC or on the terminal itself. So you still have the obligation under the rules to protect that. So if you think about all the breaches that we've seen that had nothing to do with counterfeit cards, right? Completely different topic. The breach at Hyatt Regency, the breach at Target, the breach announced today involving Wendy's. Those are all exfiltration of data from the point of sale terminal, either malware on the equipment itself or someone getting into the network and intercepting the data. So it's really two different things, and the misconception there is that because the card is more secure, that the data is therefore secure end to end, and that's just not the case.
It's a great overview. Jason?
So I discovered an old AOL account, email account, and I pulled up to find out what my inbox looked like, and there were probably 5,000 emails that were unread that I'd received over the years. And just by browsing, I would say that 90% of those emails were unsolicited email or spam, right? So that is a common way to infiltrate a business with a virus or a malware, and it's also a vulnerability for most businesses. So that falls into the category of system security or data security. You also have to think about the systems that you're operating and the vulnerability points that exist there too. What you also have to think about is the physical security of the locations. So a lot of the large data breaches that we've heard about in the news really involved a physical security breach more than a system security or a virus or malware that was being installed. And that had to physically be entered into the servers of a business location that could then web its way out into the rest of the network and harvest the data that it was looking for. So PCI compliance, as he mentioned before, is a great way for merchants to really be conscious of how they're handling sensitive data, confidential data, cardholder data. So obviously PCI compliance is something that every business needs to take very seriously on an annual basis at minimum, and some businesses on a more regular basis than that. And next is really thinking about how our systems are operating, change passwords frequently, have systems that require password changes on a regular basis. Our systems are very secure, and it's difficult as an employee of my organization to memorize, I'd say, 15 different usernames and 15 different passwords that change every 30, 60, or 90 days. But it's worth the effort.
Thanks, Jason. Bruce?
Yes. One of the topics that we encourage in talking to businesses is to be aware of, your data may be fully encrypted, you're doing all the right things, you're protecting the information in your shop, and that's great. But what about the vendors that you use? What about your suppliers? If you're transmitting any of that information out to them, how safe are they keeping it? It's one of those things that sometimes gets overlooked, but it does present a real risk. We found that no one is really, I shouldn't say no one, not many attacks are going against servers now. They're going to Joe in his cubicle. He'll get an email, it'll have a link in it, and it'll be a fish or a spearfish, and bingo, he'll hit that link and it's all over because he's just opened the back door and let people in. So this could potentially happen at a shop that's not yours, but is handling some of your data.
Yes, one of the things that these EMV terminals all bring with them is they're all basically IP-enabled devices, so they can plug right into the internet. And while that can speed up transactions, it also can put that business owner more at risk than they would when they just had a dial-up terminal, a standalone device. And so one of the requirements that we see in the industry is as merchants move to IP-enabled devices, is they really need to have a managed firewall solution that's protecting their point of sale system. And there's a number of companies that provide those managed firewall products. In fact, there's one in Lexington, Kentucky called EchoSat that we're somewhat affiliated with. But this company is completely focused on providing payment security and encryption for the non-IP based systems. The ones that are IP based, they have a managed firewall product that's used to protect that enterprise. Target's breach came about because they had an always-on VPN. They had a virtual private network. The people that worked on the air conditioning had the ability to get into this virtual private network. And again, in a managed firewall environment, you open that system up to let a third party in if they have the right credentials. But you also monitor their activity on that system. And when they're done with their work, then you take them off the system and they're no longer able to access that. So it's really important if you're a small business owner. The other nice thing about these products is they tend to have cell phone backup. So if your internet goes down and you got an IP-based system, you can't process payments anymore if your internet goes down. And these managed firewall products out there typically have kind of cell phone backup infrastructure built in, so immediately you fell over. And so anyway, I would encourage you to learn more about managed firewall products if you're running a small business today. I want to move the discussion over to mobile payments now. And I mentioned at the beginning that the networks, they saw this happening with EMV. They were concerned about fraud, but they also knew that mobile payments was coming down the pipe here, and they were thinking of how do we better enable the POS for mobile payments. And so EMV is requiring a re-terminalization of merchants across America. And while they're only a couple $100, for some small merchants, some of these integrated systems to upgrade for EMV can be very expensive. In fact, it's estimated the merchant community is going to spend $7 to $8 billion upgrading their POS systems to enable for that. I started to say earlier, if you do upgrade for EMV, make sure that it has NFC capabilities too, because you'll need the contactless capabilities as your clients start coming to you saying, hey, do you accept Apple Pay? Do you accept mobile payments? And so kind of jumping into mobile payments here, and again, I want to just provide a little bit of context, because when people talk about mobile payments, that can mean a lot of different things, right? So one of the ways that we tend to look at this is, you've got mobile banking solutions that a lot of us probably use for checking, paying bills or making deposits or checking our accounts or, conducting online banking, traditional type transactions. And that market is maturing quite rapidly. Then you have mobile acceptance, which most people have heard of Square. And you think about, the dongle they plug into the phone and accept card payments through a mobile device. Taxis, if you've taken a taxi, or Uber, which is even frictionless. But anyway, mobile acceptance is also maturing pretty rapidly. The third category of mobile payments, as I think about it, is really mobile payments with a wallet. It's using your phone, to purchase a good or service, to conclude that transaction. And so with kind of that background, with the various forms of mobile acceptance that are available today, where are you seeing some of those pain points? And Bruce, again, I know you talk to a lot of consumers, you talk to a lot of businesses. I'm curious what kind of feedback you're hearing from those clients around mobile acceptance and then also mobile payments. They're probably not talking as much about the banking side, but acceptance and payments. How are your constituents thinking about that?
As with anything else, the apps are growing so rapidly that it's very hard to keep up sometimes with what exactly is the hottest new thing going on out there. But of course, with the mobile phone, I use it. I use my phone that way. How many of you do use the phone in that way? So it's beginning to grow, however slowly, but it will take over as it always does. The folks' greatest concern is this: am I dealing with a legitimate organization, a legitimate company? And that is often difficult to tell on a phone. If whoever they've hooked up with, this particular business, if they're going to make a payment, is this a trustworthy business? How do you know? So very often they will contact us just to get the background information. I don't know if there is any plan to certify these companies for mobile payments. Do you know of anything like that? We have VeriSign and we have other things, but I don't know of one that blesses them.
I mean, I think that's one of the reasons adoption has been slow is because there's no standards body that's really out there publishing standards that everybody is going to adopt. You got Apple Pay, Samsung Pay, Android Pay, and then a lot of the retailers, as you said, Bruce, that are developing their own apps, that don't use those solutions at all.
Yeah, so people are a little bit understandably apprehensive about using it. I think it will, the early adapters, raised your hands in the room here, and I do the same thing myself. I do give it a try, but we're very, very cautious with it.
Have you seen the mobile wallet commercial that has come on here recently where consumer walks in, puts the goods on the counter, small mom and pop business, and he pulls out the phone and he wants to make a payment with the phone, with near field communication. They said, oh, we're sorry, we don't have the ability to do that. He taps the phone on the credit card machine and the payment is completed, right? So I think that's an indication really of what's going on with the industry is that consumers will drive behavior when it comes to mobile payments. And this technology is not new. Near field communication, NFC, as Tom had talked about before, that's not new technology. Computer chips are not new technology either, but what we're doing is we're pulling all of this pre-existing technology together in a uniform standard that can be adopted by both consumers and retailers alike, as well as financial institutions. So the big hurdle has been to get everyone on the same page. Let's get consistency in what we're doing for mobile acceptance, and really the Apple Pay was probably the paramount mobile adoption that really kind of sparked a lot of consumer interest in this. We saw some very quick adopters just after Apple Pay with the Android devices as well. And now what you're seeing is retailers, as Tom was indicating, tying in some of their loyalty programs into their mobile wallet solutions. So they have the competitive edge. But that was the conflict. The conflict was we have to make it work for the mobile devices. We have to make it work for the financial institutions, the retailers, as well as the consumers. So the retailers have a say in their loyalty programs, and they lose that loyalty when they submit to some of those other payment forms like adopted by the wireless companies today.
Doug, do you have anything you'd like to add?
Well, because there have been so many different competing platforms, and all of them involve some level of complexity or expense, I've kind of been skeptical about uptake and adoption. They're more of curiosity, but I changed my mind about that a little bit today when I saw an announcement from, I believe, Chase. Chase is not the first bank to do this, it turns out, but they are implementing a cardless ATM solution. And it's where you basically walk up to the ATM, push a button, it generates a QR code that you scan with your phone. Then Chase sends you a PIN number, for lack of a better word, a code to the device itself that you can then enter into the keypad. So it provides security, it provides authentication, it prevents card skimming, and it seems relatively easy, and it's app-based. It works on the ATM. Everyone uses ATMs. And it's a way that the banking industry might really reshape consumer behavior in that area. Because for near field to work, you've got to move people away from this idea that we pay with cards, just like you had to move people from the idea that we pay with checks. So that may speed things up.
Great. I'm going to ask just one more question here, and then we'll open it up for the audience. And really, the last question, we touched on a little bit this, but is the number of apps that are coming out is, the fragmenting of the mobile payments landscape, is it making it more difficult for people to adopt? And do you think that a small business, should develop their own mobile app? I'm sure we've got some small businesses out here that, are curious. Hey, do I need an app like Walmart's done, or someone, one of the larger providers? Jason, what do you think?
Thank you. Actually, great question, and it's something that came up recently with some of our contacts within the payments processing world. So there are, the advocates for the small business out there in various forms or fashions, and some maybe work behind the scenes that you're not aware of in the payments business. One in particular, and I won't mention the name, a large CUSO, credit union service organization, came to us with exactly that question and said, how do we solve for this? How do we provide a solution that can help the small businesses compete with the large retailers that are developing their own mobile wallet solutions? And that's probably a very big opportunity for the marketplace today, but I don't think it's something that's going to be solved for very quickly. Knowing technology the way that it eclipses yesterday's technology so quickly, I won't be surprised when I see this adopted, but it's going to be difficult to solve for because it really turns our industry upside down. We're accustomed to operating a specific way, and you as a consumer know this now. When you see someone pull out a chip card at a retailer, or even when you do, you don't know if you're going to have to put that in as a dip with the chip, or if you're going to have to swipe that card like you have in the past. And it's a surprise almost every time, right? And back to your first question, as far as the diversity of applications that exist in the marketplace today, is it complex? Is it difficult for businesses? I'd say it's extremely difficult for small businesses, but also difficult for large businesses as well. Because with as many different technologies that exist in the marketplace today, and how rapidly things are evolving as far as technology goes, what we're seeing in the marketplace is confusion, right? Confusion around how the application fits in my business, or from a consumer's perspective, how does this application going to work? And if I do use this specific application, will it be universally received by the merchants that I frequent on a regular basis?
Thank you. Bruce, anything to add on that? He talked about confusion. Back to FUD, I guess.
Yeah, we're back to FUD. 95% of our association is small businesses, and for this to work, and I do agree with you, it's going to be a struggle for a lot of these folks, because some of them are just now starting to build websites, and you would think that everybody has a website, but no, everybody does not. So if there's an off-the-shelf solution that a small business can employ, that would be wonderful. I think it's off in the future somewhere, though.
Thank you. Okay, at this point, I'd like to open it up to the audience. Did you have a question? Well, there are some additional security features built into the phones, in terms of those payment applications. I don't know if one of you guys want to speak to that, but, in terms of, Jason, you want to take that?
So I've got a question for you. How often do you hold your wallet or your billfold in your hand? How many minutes in a day compared to how many minutes you hold your cell phone in your hand? You're more likely to leave your house in the morning without your wallet or billfold than you will without your cell phone. I guarantee it, right? So that's the way that the society is changing, right? We're evolving with the advent of the new technology. We become spoiled. You know, I saw my 14-year-old son get frustrated because he looked at a frozen meal and it said it was going to take 5 minutes in a microwave. That was amazing, right? So we've become increasingly more impatient as time goes on. But you have to remember that as we're adopting some of this technology like near field communication and EMV, what we're looking at doing is trying to really stay a step ahead of everyone that's working against us to use this system illegally or try to gather information that they shouldn't have access to. So your concerns are legitimate, and everyone should have concerns, but with that concern, don't go in without trepidation, but go in accepting the technology as it comes. There's truncation that exists in some of the technologies that help change the format of how numbers are transmitted from the merchant location to another site. Or if you're transmitting mobile or doing online banking, there are certain protocols that are in place to really protect your data. Surprisingly, there's more identity theft and card compromises than we ever know about. How many of you, by show of hands, have received a new credit card without knowing or requesting, right? Just because the bank sent you one. That's likely because your card was compromised and you had no idea. But the bank's not going to tell you that.
And Doug, I think you've got a lot of experience working with fraudulent situations, and you were telling me where most of that fraud comes from, as opposed to a data breach or someone capturing that information through a sniffing device or something else.
Well, as far as the source of the data for counterfeit cards is usually exfiltration from things like a gas pump, where skimmers, and that's gotten to be an old problem now. It's like, we've been talking about it for 3 or 4 years, and it's still a big problem in the petroleum industry. Once you get that data, if you talk to people in law enforcement, that data ends up re-encoded on things like gift cards from a Lowe's. I mean, it's that simple. If you walk in Lowe's and just steal a stack of gift cards that are worthless because they're not in a secure location, and then encode them with track data from a Confederate, then go to a place with point of sale terminals and buy stuff, with your own checkout. So, and then as far as the sources of data beyond that, there have been a number of breaches in Louisville that have been either on point of sale hardware in a device. When the Hyatt announced their breach, the Louisville location was among the locations that were listed. I thought it was kind of funny that one of the hacker conventions that's in DerbyCon is every year, and DerbyCon happened to fall back in the summer. When they found out about the breach recently, they put out a notice on their webpage, if you stayed at the Hyatt during DerbyCon, your card may have been compromised. It had nothing to do with them. It's just funny.
Thank you. More questions? I think you had one.
Yeah, you had mentioned the difference between swiping and dipping. You're talking about the dipping with the new technology is a lot slower. It's a disruption because this is caused slow. What's the cause of the delay using the dip versus the swipe?
The card has to be inside the machine through the entire transaction process for an EMV, right? So when we swipe a transaction today, in some cases, we're asked for a signature. In some cases, we're asked for a PIN number. In some cases, we're not asked for anything at all if it's a low dollar amount and a low risk type business. So it's a very quick transaction now. We've become accustomed to it. But now that you have to insert the card into the machine and you have to go through the entire process. If it's a chip and PIN, you have to put the PIN number in, you have to verify the transaction. And I don't know, it seems like there are so many more extra steps in a transaction today. When I go to a retailer, is this dollar amount correct? Would you like cash back? And maybe other questions to verify that transaction before it goes through. So all of those additional steps have to occur while that card is inserted into the system. Otherwise, with a magnetic strip, we swipe and we go through those prompts very quickly, almost out of habit. So it's more of a disruption of what's going on, but that physical card has to be inserted into the machine.
There's nothing going on at the back end that's slowing it down. It's just
No.
the mechanics of
No.
Other question? Yes, in the back.
Warren Wilson was fluent. The Chase cardless ATM, that technology seems to have come from Bitcoin, because there's a group that were making Bitcoin ATMs for Bitcoin at like standard banks in Spain. That they basically scan the QR code, push the transaction to it, and got cash out of the ATM. So with that being said, because there are these types of technologies that are associated with cryptocurrencies that are coming, where do you all see cryptocurrencies in the future? Not necessarily Bitcoin, but a lot of banks are researching blockchain. Where do you all see that coming as far as electronic payment and to be able to secure and do a push transaction instead of a full transaction on a lot of these payments?
One of you guys want to take this first start with, or I'll...
No, the whole area of where Bitcoin and virtual currency fits into financial services regulation and banking is such a complex area, and it's not really what I do. I don't have an answer. That's a great question, and I cannot help you in the least.
It is. I guess I would say, because we actually talked about, there was some discussion about, do we want to talk about Bitcoin up here as well? Because there's, if you follow the payments media, there's a lot of interest in Bitcoin. But quite honestly, from a practical standpoint, for a small business, or even a medium-sized or larger business here in Louisville, Kentucky, I mean, it's almost irrelevant. There's just, now the thing that's interesting, and it seems like there's a lot of opportunities for fraud within Bitcoin as well. If you think about it, every payment system in the United States that is used with any significant scale today ultimately comes back to an account the consumer has with their bank or their credit union. It's either their checking account, their ACH, or it's a card, either a debit, credit, or prepaid. And so all of those systems ultimately provide for positive identification, provide for tracking balances, and the banks keep track of these transactions that occur between individuals. Money doesn't necessarily really change hands. And I think that was kind of the idea with Bitcoin and the blockchain technology, which does seem like there's a lot of people in the IT world that are very interested in that technology. So rather than the bank being the person of record keeping track of all these transactions between individuals, those ledgers can be maintained, outside of that central location by other individuals. And again, I'm not an expert on Bitcoin either, because I haven't figured out if any of my customers, need to understand it to make more money or save on expense, and we've not seen it really in our business. But Bruce, I don't know. Do you have anything? No. Not much there. Jason?
He stumped the band.
Yeah. So it's a great question. Other in the back?
Yeah, I just want to say I'm the organizer of the Louisville Bitcoin meetup. If anybody has any questions about
There you go. I knew we had at least one Bitcoin expert in the crowd, so that's good. Yes, ma'am.
So within the last year, a lot of these platforms, Twitter, Facebook, even Snapchat, have incorporated payments into their platforms, and I was curious if you all had any thoughts on what we can expect to see as far as using that for business purposes, purchasing goods, services, and even paying our peers there.
Jason, you want to jump in here?
Yes. Yeah, absolutely. I think what we expect to see is the evolution of that continuing to permeate all throughout your social media as well as your retail sector. There's some interesting applications coming out As I'm sitting up here, I thought about one of the presentations that we saw recently in our last annual sales conference, talking about that type of technology, but also talking about beacons, which I think is also interesting. But what it's really trying to do is connect more to the end user or that client, right, or that customer. So with the beacon technology, what it's going to be able to do is really provide some real-time data on spending trends and spending habits of the consumers. These applications will help you as well, right? So the retailers will have more intelligent information. So imagine driving by a retail location that you shop at frequently and receiving a push code coupon offer that says, hey, stop on into X merchant and receive a 20% discount on children's clothing or something like that. Or walking past or into a restaurant like a Subway when you frequently go to another type of sandwich shop maybe, and getting a push notification from a competitor that says, hey, we know that you're at Subway, but if you come into our sandwich shop, we're going to give you a buy one, get one free offer just today.
And yeah, go ahead, Chris. You want to? This is Chris McNulty, also a long-term payments industry expert.
I just wanted to add to your question because I think the social media payments is something that is kind of on the cusp of booming. I think the thing to keep in mind as it relates to social media and payments is typically, and I'll use like Facebook payments as an example, there's a traditional payment vehicle behind that, right? So when I do a Facebook to Facebook payment, today it's tied to my debit card, right? So at the end of the day, it's just a methodology today to propagate traditional electronic payments. And Tom was alluding to stats earlier about the 82% I think it is now, right? So with the social media outlets getting more engaged in facilitating payments, you're going to see electronic payments go even further. And there's a lot of, hey, I lost a bet to you on the Patriots game this weekend. I owe you $20, and they're using those P2P payments through social media as opposed to I'm buying goods and services in a business. So I'm not saying it won't happen, but it's not here today where I can walk into my local restaurant and buy my meal with my Facebook app, if you will. So I think, though, there's a lot of testing, there's a lot of things going on, and I think you'll see, companies like Apple, of course, they'd love you to use kind of their currency, if you will. But even to use an Apple currency, you're loading it with traditional currency and traditional payments. So think about it that way. I mean, it's a great question, and it's exciting to see it happening, and I think it just really facilitates more payments.
It is, and I think as a consumer, you should check your bank statements to make sure you understand what kind of fees your bank is charging you to be on the receiving end of those payments. Because the same thing, I don't know if you ever use Venmo. Venmo is used for P2P payments, and I've got a Venmo account that I've used for sporting bets and with some friends and some other things like that. And that's exactly, it all comes back to my bank account, though. My comment earlier, and that's what has thrown me for a loop with Bitcoin, is, what account is it tied to? Because ultimately every payment system that's had any success is tied to some fundamental account that the individual has, typically with a bank. It may be a prepaid company or someone else like that.
Well,
Doug?
I wasn't familiar with Facebook, and I don't use Snapchat, but I mean, it sounds like it's more of an analog to PayPal than
It is. It's very
to support,
similar.
like small payments and peer-to-peer stuff.
Yes. Other question? Do you have a question?
Yeah, it's kind of based along the same lines. How long do you think before, I guess, using plastic cards and things will go away? That's a great question. They're so antiquated. You talk about you have the chips, you have the swipe. However, most of the purchases people are purchasing online more and more, and it becomes less necessary to have a credit card. I barely even use mine at all, even though I have it, but I barely use it because I make all my purchases online.
It's a great question. And again, I think one of the reasons why NFC technology at the point of sale is important, and I do think the slower speed associated with the dip and chip for authorization is going to cause a lot of merchants to really want to see their clients quickly move, and consumers who don't want to stand there for the extra 6 seconds to move to NFC technologies and start paying by phone. I don't know, others, do y'all comment on this?
Yeah, I would definitely concur concur with that. Our attention span and our patience are quite a bit abbreviated from what they used to be. And the thing to remember too is that these devices are not bulletproof. They're going to have problems too, and that's going to slow up the process more. And we are an expedited society.
Any of you guys want to add there?
I'd say the primary question was when. I think it's anyone's guess, right? So it's like watching a movie that's based in the future. You know, we can put our speculation on how quickly technology evolves in certain areas. Obviously, the industry's moving that way. We're moving away from what we historically have been accustomed to, right? How long ago has it been since checks have become irrelevant at point of sale, right? We still mail checks for maybe utility payments or some, school function, but rarely do I ever use a check anymore. And I think eventually that's where credit cards are headed as well.
I want to just quickly, especially thank Jason. Again, if you follow the payments industry at all, there was a big announcement that was made today, and that announcement was TSYS, which is one of the publicly traded processing companies. They're based in Columbus, Georgia. Again, that's who Jason works for. TSYS announced this morning a $2.4 billion acquisition of another company called TransFirst. And TransFirst is a payment processing entity that's been involved in the industry for over 30 years. But anyway, congratulations on that transaction. I know Jason's been in meetings with employees and clients all day, you know, who are asking questions about, okay, what's this big merger now, you know, with TransFirst going to mean to us? And so we really appreciate you making time to be here with us this evening. Other questions? One more question. Okay, last question. Yes, sir.
What role does tokenization play in security? You mentioned EMV, but I think there's a separate piece that I've read about which is called tokenization, but I'm not sure everybody understands.
So you've got two things associated with the mixing of data, right? You've got one that's called encryption and one that's called tokenization. So I'll try to see if I can define that as easily as possible. Really, if you think about encryption, what that does is it changes the format of the credit card information from the merchant location to the processor and then back, right? Tokenization is a little bit different. It does something very similar to what the encryption does, but think of it more in a recurring payments environment. So a token would give me the ability to have information on my customer that is a repeat client. Maybe I'm a gym, maybe I'm a utility company, maybe I'm a higher education learning. But it's a recurring payment that happens, and it gives me the ability to have a token rather than a full credit card number so that I can have those transactions occur on a regular basis. Does that make sense?
And that token can't be used in other businesses.
Right. It can't be replicated, it can't be deciphered by any other business outside of the sender and the receiver.
Well, again, I want to thank the panel for their time this evening.